You know, in investing, there's this old saying, let your winners run. And it's great advice, right? Until one of your stocks runs so far, so fast, that it actually starts keeping you up at night. Today, we are going to tackle one of the absolute hardest decisions any investor has to make. What on earth do you do with a potentially life-changing gain?
And look, this is not a drill. This isn't some theoretical exercise. This is a real position, sitting right here in my own tax-free ISA account. I own just under 158 shares of a company called Nebius Group, ticker NBIS. And after a truly massive run-up, this one position has just blown.
And that's the number, yeah? Over 10,700 pounds. Now, for a portfolio that's aiming to turn 75,000 into $1 million, positions exactly like this are the rocket fuel you need. But man, they also present a huge, huge problem.
My guts, my emotional brain, is just screaming at me to sell. Lock in that profit, take the cash off the table, and just feel safe. But my rational, system-driven brain knows that selling your best performers, cutting the flowers to water the weeds, is very often the single biggest mistake you can make. So how do we solve this? Well, we need a framework.
Okay, so where do we even begin? The very first step is to completely ignore the stock price and go right back to the beginning. We need to check our original thesis. We have to ask the big question, why is the stock actually up? Is this just market hype, or has something fundamentally changed for the better with the business?
Let's start with the bull case. What's all the good news? What's the engine driving this incredible performance?
The catalyst here is it's huge. Nebius just signed a massive, massive deal to provide AI data center infrastructure for Meta platforms. Yeah, that, Meta. Now, this isn't just another good contract. This is a powerful validation of my entire original thesis, that Nebius is a key picks and shovels provider for this AI gold rush. The demand from the biggest tech companies on the planet is real, and it is accelerating.
All right, so the bull case is strong, really strong. But conviction without skepticism, that's just gambling. So now we got to do the hard part. We have to actively try to poke holes in our own argument and hunt down those hidden risks.
For this, I use a very specific tool because I need something to fight my own confirmation bias, especially when I'm feeling this good about a stock.
I have an AI agent that I call Mary Jane. It's really just a custom prompt that tells a large language model to act as my chief risk officer. I tell it, act like a ruthless short seller, ignore every bit of hype, and find me the single biggest threat to my investment. And honestly, her answer was not what I expected at all. She didn't come back with competition from Amazon or Google, nothing like that. She said the single biggest risk is dilution. So what on earth does that actually mean for us?
Well, this is what we call the hyper-growth trap. See, to build these enormous data centers for Meta, Nebius needs billions of dollars to buy things like NVIDIA chips. They don't have that kind of cash just lying around. So they use something called an equity program to basically print new shares and sell them to raise money. And here's the crucial part. When they do that, my 158 shares suddenly represent a smaller and smaller percentage of the total company. My slice of the pie gets thinner. It's the price of admission you have to pay for riding a rocket ship.
So here we are. We have this conflict. On one hand, a totally validated thesis with a monster customer. And on the other, this structural risk of dilution that could really hurt shareholders down the line. To make a decision, we need a clear, unemotional system.
My system gives me 3 and only 3 options here. Option A, we can trim. I could sell just a small part of the position, maybe enough to get my original investment back. That's the whole playing with house money strategy. Option B is to pyramid. This means I see the Meta deal as a massive green light and I actually buy more. Maximum risk for sure, but also maximum reward. And finally, option C, hold. Do absolutely nothing, just accept the risk of dilution as the cost of staying on board this ride.
Okay, we have examined the bull case, we've interrogated the bear case, we've laid out our strategic options. Now it's time to make a decision. And this is the most important part, to set the rules that will govern that decision from this point forward.
After running it all through the framework, my decision is option C. I am going to hold and monitor. I am not selling a single share, not one.
So why? Why hold? Because my entire thesis is that we are in the very, very early stages, like the first inning of a decade-long AI infrastructure build-out. Selling the company that provides the picks and shovels right before the gold rush really kicks off, that just feels like a massive, massive mistake. The potential reward, in my view, is still so much greater than the known risk of dilution.
But let me be crystal clear.
Holding isn't based on blind faith. It is conditional. I've set a thesis stop-loss. My thesis is officially broken, and I will sell immediately if Nebius fails to execute. If they miss a key delivery milestone for that Meta contract, or if their operations falter in any serious way, I am out. But as long as Mark Zuckerberg is writing them checks, I am holding my shares.
You see, making the logical decision is one thing, but having the psychological strength to actually stick with it when the market gets crazy, that's another thing entirely. That requires more than just a framework. It requires a safety net.
And that is exactly what we are going to cover in the next explainer. We're going to dive deep into the practical steps, how to structure a proper cash buffer, how to use position sizing rules to make sure that even if a high flyer like Nebius were to crash and burn, your entire portfolio survives. It's a system that lets you actually sleep at night.
So I'll leave you with this question to think about. A system can tell you what to do, but it's the safety net that gives you the courage to actually follow through. Thanks so much for joining me for this breakdown.